Commercial property with Rethink Investing.
Australia's largest and most comprehensive podcast covering all things commercial investing.
G'day, how you going? Phil Tarrant here, co-host of Inside Commercial Property for episode 46. And I must admit, we're probably going to go outside my comfort zone. Most of the time I can fake knowledge about most things, but today's topic's going to put me out there. So we'll see how we go, because we're going to be talking about renewable energies. And what I know about renewable energies can probably be written on the back of a beer mat. But what I do know is that the government's spending a lot of money around this at the moment. And we're recording this literally a week after the budget. We saw one of the major initiatives of the government is going to be ongoing investment in renewable energies as they sort of move towards to take Australia towards this net zero by 2050. We're going to get stuck into it. Don't worry. I've actually got people that know what they're talking about. Scott O'Neill, my co-host on Inside Commercial Property, I think knows a fair bit about this. And our special guest today, Paul Harmsworth, Director of Rethink Renewables, knows a lot about this. Is that a fair call?
Yep. I often refer to Paul as Rain Man for the renewable energy. He literally is like one of the top minds in the country for this stuff. So
Is he? Okay.
He has pulled apart business models of existing businesses that he can see from afar that didn't work, and then miraculously they fell apart 12 months ago. So really high level knowledge here.
Well,
So
it's still early days, to be fair, in renewables, and we're still trying to work out what the future looks like. And the government has these ambitious targets towards net zero. So welcome to the podcast, Paul. And I apologise for what will probably seem to you to be very simple and basic questions, but no doubt a lot of our listeners probably have as much assumed knowledge as I do as around renewables. And what I want to get to with this podcast, and to simplify it right at the front end, and maybe I'm going to get this completely wrong and we can debrief back at the end of the podcast to see how close I got to this. This is about commercial property investors putting renewable energy capabilities into their properties for the benefit of the tenant and driving down power costs. I'm a really, really simple guy, and it sounds like this is what we're going to talk about today. Is that a fair place for us to start?
Yeah, it's a fair place. There's probably what we also want to focus on is the upside for the landlord as well. So it's a win-win. It's a win-win for the tenant. It's a win-win for the landlord. It's a win-win for everyone involved. Plus, we've got the added ESG benefit and carbon offset benefit.
So there's a number of different ways we could take this podcast. So I just want to park one part of it, and this is towards I want to talk about the business of renewables for the purpose of commercial property investing, which I don't think has really been done before. So that's where I want to concentrate. But I just want to put up front the climate benefits for embracing renewable energies for Australia and the rest of the world. So I want to acknowledge that we all see that as an important thing to do, and everyone has an obligation to work beyond what we're doing right now as we embark on that. And we're not going to get it right, but I think the intent is right. So I just want to clarify that, yes, we care about the climate and the environment. So just assume that, everyone, but we're going to talk about how this could be commercialised for the benefit of securing those outcomes. So you're a climate advocate, all that sort of stuff?
Yeah, absolutely.
Yeah.
Absolutely. I think that solar, renewable energy generation as a whole it's feel good, but it's a financial model ultimately. So we have the upside on both ends. So
it's okay to get a commercial benefit from providing things back to the climate and the environment we live in.
Absolutely.
Yeah,
absolutely.
Okay. That's right.
100,
It's very altruistic, an altruistic commercial outcome. So the thing is that you get two really good outcomes. You get commercial gains and financial benefit, and you also get a cleaner, healthier, happier Earth.
Yeah, absolutely.
Okay.
And you get energy security.
And that is security.
That is a big topic of discussion.
I'm happy you started there, because I wouldn't say I'm a cynic towards renewables, but what I would say is that we have a long way to go before it is truly a feasible capability for Australia, particularly some of the challenges we face in our part of the world here. So the right energy and effort is going into trying to shape this. However, we're still some far away from it. So energy security, to me, is intrinsically linked with national resilience, and national resilience is intrinsically connected to security, safety, economic prosperity, and all that sort of stuff. So it's all interconnected. But people need to make sure when they flick a switch that a light goes on. And we've seen over recent years loads on our energy networks where we live in one of the most advanced countries in the world, but we still get powder shortages and power outages. So it's a big deal, right? So we're a long way away from it.
Yeah,
I would say.
Yeah, I mean, debatable. Like the renewables is supplying and has supplied up to 40% of our power at certain times of the day. Obviously, we have some base load considerations we have to think about that come from gas and come from traditional generation sources, coal. But in terms of resilience, it's absolutely pivotal to our resilience moving forward. So, with the rapid introduction of battery energy storage systems and grid firming technologies, this is the way of the future. And that net zero target that we're talking about, that's splashed all over the media, the way that we're going to get there is through renewables.
So for me and our listeners, so I'm sure Scott knows this, can you just define what in a real tactical sense, what is renewable energy? I need to know what is it and what does it do?
Yeah, effectively, it's energy generated from renewable sources, whether it's wind, whether it's hydrogen, any sort of dispatchable renewable sources. So regenerative source, basically. You're not burning a fossil fuel to create energy. So a traditional market is we'll put coal in a big furnace, burn it, generate steam, and we get energy as an output. There's marginal cost in that. You've got the coal cost. You have to dig it out of the ground. Compare that to something like a solar asset where you physically have the capital cost to purchase it, but there's no marginal cost to operate it. The sun shines every day, and if that doesn't come out, we've got bigger problems. Yeah.
So there's the manufacturing of the energy, and then there's the storage of the energy, and then it's the utility of the energy. And again, I'm just really simplifying it for me. So we're pretty good at the utility of the energy. We all know how to use energy. The idea of using the natural environment to manufacture energy has been around for a long time. Even hydroelectricity in many ways is using natural resources, the river flows. Where the biggest advancements and why this is becoming more prevalent and probably accelerating the shift towards renewable energy is our ability to store it.
Correct.
That's the bit that the tech advancement of that is growing at a rapid rate. Faster than probably any other technology we've had beforehand. Yeah.
So if you look at it, just dispatchable power, storing it and using it when you need it. That is the problem. If you look at any publication around power, people are always talking about base load and how do we figure out base load? And
what does that mean? Just what we need just to get by.
So basically, solar panels are great, but they don't work at night. So, we have to figure out how we're actually going to dispatch energy at night. So, ultimately, when you're looking at it from that sphere, you have to have other generation sources. And, batteries are coming into the fray. The technology is advancing so rapidly that they will be a viable prospect moving forward. But that being said, they're not there right now. We can't just turn around and say we're going to install batteries everywhere. And that's a proven solution for right now because they're not the levelized cost of electricity. They're just not that financially viable at the moment. But they will be. As the integration rates pick up, the levelized cost of electricity, which is the metric that drives all of your decision making around energy, that being produced out of batteries will be lower than a gas turbine or coal or any one of these sort of other generation sources.
How did you end up becoming a renewable energy guy? Is this something when you're at school you went, I want to be a pioneer in renewable energies?
To a degree, yeah. Look, it was just I think it was right place, right time. I entered the renewable industry when I was the tender age of 21. So okay. I was a young guy, and it was in the sort of early adoption phase. People didn't really know what it did. They knew that there was a benefit. They knew that it was renewable, but what really shaped our industry, what drove it, was the financial benefit. I think that without the financial upside, it's a hard sell. Obviously, we want we want to generate an economy that's driven by renewable energy, but there has to be an economic benefit. Yeah. So that's what drove the boom of solar in the 2008 2010 period. everyone was getting it on their houses because they had a huge feed-in tariff, which was basically if you put solar on your roof, you generate energy. The grid will buy that energy back at a 1-for-1 rate, or double what you pay to pull it from the grid. That doesn't exist anymore. So that's sort of where some of these misconceptions are born of in the industry, was what it was and what it is now. Two entirely different things. And at that point, there wasn't much commercialization in the commercial industrial space. It was new, wasn't really explored, but that's a boom market at the moment, absolute boom market.
So Rethink Renewables, Scott, to the point Paul just made, needs to be economic benefits from it, and money attracts money, and there's a lot of money coming in from private equity, VCs, super funds, large sovereign, debt funds are all looking at this, and the point is it's not perfect at the moment. It's got a long way to go. However, it's attracting the right type of capital to accelerate its growth and expansion. So for Rethink, there's got to be something in this. What are you up to?
So about 2 to 3 years ago, I was dealing with a few sort of tenant negotiations at the time, and it was in the DD stages of purchasing properties, and essentially what we were trying to do is who's getting the benefit from this solar panel, and it was always going to the tenant. And sometimes the landlord would simply just leave it and they wouldn't include it as part of the sale. And we're thinking there's a valuable asset left on the roof, which was the solar panel. And sometimes they were claiming it, sometimes it wasn't. It was just a really strange grey area. So looked into it more and then discovered something called a PPA, Power Purchasing Agreement. Essentially, a landlord can set that up with a tenant, and basically the landlord pays for the solar panel. So they might drop 100K or 200 depending on the size. And then you can charge the tenant they'll get the power from you. So instead of going from the mains, they get it from you. And the great thing with commercial property is you generally would think they work in daylight hours. So, and then think about industrial, these are massive roofs in the middle of the suburban areas. So there's something there. And the more I looked into it, I go, why is everyone not considering these could all be power plants, essentially, mini power plants? So obviously, until they create a superconductor, there's going to be a need for power to be close to its source of use. So that's when I looked further in, and I found there wasn't really any companies that were helping the landlords doing this. And obviously that's my job, represent the landlords. And we worked out if you could create a lease that is the same as any other lease, like a 10-year lease to a third party, then it's like a normal lease on a property. So if, using your property as an example, Phil, I'll go, all right, we can put a solar panel on your roof in Perth, and then you might be able to get a $5,000 income per annum out of that. Your cap rate out of that would be, 6%. So you can actually then use that income on top of your cap rate. It generally works out to be about a 0.2 to 0.3% increase in yield. So increase in the yield actually increases the equity. So not only do you get a new lease or an income on your property, you're actually going to be getting an equity increase, and it's now multi-tenant.
So in a traditional sense, if I'm a landlord, owner of a property, and I have my own power plant on the roof, I would charge the tenant at a zero-sum contribution to it. So what I would sell it to them for what essentially I make it for, right? Yep. Which would be the amortization, I would imagine, of the asset itself.
Yep.
So do you generate more money through the arbitrage of the power? So you become your own sort of localized power provider, and that's what you're talking about there. And does that happen as a priority for a lot of people? I imagine most people don't even think about this.
Yeah, so there's two ways you can do it.
Yeah.
As a landlord, you do it yourself. You come up with the capital, spend the money. That means you might have to drop that 100,000 in, but effectively all you're doing is reducing the outgoings on the property. Or you can kind of on-sell it to the tenant, but it's not going to give you the same yield advantage. This is where no one really has done this model, where you actually separate it. And I'm doing this on my properties. Paul's doing it on his. You want a third-party lease. So you'd think, wouldn't I just put my own solar panels on with my own money on my own properties? No, I want the third-party company, which is Rethink Renewables, to do it, because then it's their risk. They deal with all the legals. They deal with dealing with the tenant negotiations, which can be tough, mind you. the way to get the tenants on board is offering them a discount from the mains. Might be 15%, might be 20, might be 10, depending on the usage. But basically the tenant wins because they get cheaper power. We win as a company because there's an income and obviously there's a risk, and it's a very capital intensive business, by the way. Like you have to come up with cash to fund these deals. So you got to, you can't just take every job on because, every 1,000 of those at $100,000 a pop. It's a lot of cash to put down. So, but then the landlord benefits the most because they've got a new lease, the equity I mentioned, and an income. Generally, it's a 10-year lease with 2 5-year options, so 20 years up. And Paul will go into sort of the age,
we'll go into this because what I'm trying to get to is just so we can have an informed chat, just a sense for how it all works. We get into the detail later on. So, just the front end, do lenders like assets better if they have renewable energy manufacturing sources connected to them?
Lenders will look at the equity, so the valuation. So they'll lend on the new uplift in the valuation created. So it doesn't change the lending policy because it's still a commercial loan on a shopping centre or a commercial loan on an industrial asset. So nothing changes other than you've got a new income. So you've increased the yield, so you can then take the equity out based on that new income. This is verified with valuers across the country. Because I put a post up a while ago and I had all these people go, oh, you can't get the cap rate of the market. Well, we are. And it's because it's a lease. That's the difference. It's third-party lease. It's no different from a lease to a Portos or, a lease to, any of the, like a service station lease. It's a company. Yeah. It's just your roof. So we're monetizing the roof, and that's the big difference.
Yeah, okay. And let's just say you own renewable assets on your property and you're not getting it through someone like you guys. What uplift does and will it have into the future, you think, on capital value? So if I have 2 identical industrial units in exactly the same complex and like for like 100% the same, one of them has it, one of them doesn't have it, will it make much of a difference into the future?
Look, if you can create a 60 grand income per annum, like if it's a massive big thing and there's a 6% cap rate on that, you've increased the value by $1 million. And that would increase 3% every year. Yeah. Because that's the fixed increase that we're going for in these leases. So it depends on the size of the property. The real big variables, which Paul will explain, is how much usage the tenant has. So, and obviously tenants pay different rates as well. If you're some big corporate, like Woolworths, you've got a ridiculously low rate that the everyday consumer can't compete. So we don't want to go near those ones because you'd be putting it on for no margin. But the smaller tenants that have to pay normal rates, there's a way we can put the solar on, generate it a lot cheaper than they could, sell it to them back cheaper, then they win. And then, like I said, it's win-win and win. There's 3 beneficiaries out of this.
Okay, all right. I think I've got a good sense for everything now. Thanks to everyone for bearing with me as I sort of explore that. Paul, most of my relationship with solar energy right now is when I reluctantly go onto my social media and someone's trying to sell me some solar scheme, and I just go, mate, this is dodgy, and I'm just, this is my personal view, right? Sorry, it's not my view, it's my experience. There's been, a lot of the government has put a lot of money into some schemes that haven't been very good, and there's a lot of sharks out there. It's a bit cowboyish, and I'm not bundling you guys up as that, but that's my experience seeing is someone trying to sell me dodgy solar panels, right? And then I hear on the news people going, Australia shouldn't be manufacturing solar panels. There's a glut of solar panels around the world. They're making them, they can't use them, they can't sell them. Can you give me some sense globally around the solar market sector in particular? Because we're talking about putting solar panels, renewable energy, solar panels mainly on commercial buildings. Like, you guys have put a lot of skin in the game with this thing, so you obviously believe in it. So what's happening globally to give you the confidence to embark on this here in Australia?
Yeah, I think it's something that's plagued our industry. When a cricketer's selling you a solar system for this fandangle price, it's really hard. It's you get desensitized to it to a degree, and that's a hard narrative to change. And it's a conversation that we enter into to sort of say, look, actually, no, we're We're not trying to sell you this solar system, as a deal that you can't quantify the upside. Commercially and around the world, all the metrics point back to, in our industry, it's a golden metric. It's called levelized cost of electricity. And effectively, it's the measurement. And then if you look at the equation, you have to be a scientist to figure it out. There's a lot of inputs. But effectively, you look at the solar asset, you look at what it cost you to put it, to physically bring it into life, to put it onto a roof, and you look at the energy it generates over its whole life. And then you obviously divide the capital cost by the energy generated, and it spits you out this golden LCOE figure. And when you look at that, it can't be beaten. There's the only current generation source that's beating it, or is probably on the same line, is gas, and that's because we have an abundance of that in Australia. But effectively, aside from that, nuclear can't touch it. And wind is not keeping up with solar either. And batteries once they start to be mass produced for EVs, which is happening, that LCOE to generate the battery asset is going to start to come down as well. So we've got this economic climate that it would be naive to procure your energy anywhere else other than a solar system. But obviously we've got some challenges. The sun doesn't shine at night. But again, that's where we've got this, this integrated battery, market.
And I think you got a more sort of holistic view towards renewables versus nuclear power. And I only even saw today in the paper, because this is, the opposition has come out saying, the future for Australia is nuclear. There's a piece in the paper today from the CSIRO that pretty much went, it's probably not. It's going to be too expensive and take us too long to get there, and the outcomes we're going to get aren't appropriate. So it's a polarising sector right now, but there is a lot of regulatory and government incentives connected with the advancement of renewables, particularly solar in Australia and also globally. What are you seeing happening there? The fact that you're getting these government oversight and investment into this means that for you guys, it's something that you should be backing and putting. But what are you seeing primarily in those incentives or the regulatory environment that gives greater currency to this as a potential opportunity?
Yeah, it's a big market in Australia. Obviously, if you jump over to New Zealand and you have a look at the market over there, there is no incentives to install a solar system because all of their energy generation comes from renewable sources. They have pumped hydro. They have an abundance of that. But effectively, if you remove that, and let's hone in on New Zealand, if you remove all of the government incentives, which consist in Australia of the SREC, so small scale renewable energy certificates, and LRECs, which is large scale. So a couple of those sort of key government incentives. Even if you remove that, it's still a financial vehicle. Its yields are in excess of pretty much most yields you're going to get on the stock market, and other markets as well. Again, remove those out of the equation, and if the government turns around tomorrow and says, look, we actually want to throw our net zero targets in the bin. We're not interested in 82% by 2030 anymore, and 2050. Don't worry about it. It would still be financially viable to do it in the absence of all of that. So, and you only have to follow New Zealand to put that into motion. They don't have any incentive. So, and its uptake is pretty large.
So a lot of people, myself included, are probably still a bit confused, or I may have misconceptions about the realities of solar power in particular, and its applications in both sort of commercial and resi environments. What are those key, when you chat about solar, and probably the questions I'm asking you is what most people think, you must get a lot of objections to it because of what may be misinformation that people have around it. And that's not deliberate false information, but there's these, you talk to people and everyone's got a view on it. It's like property now, everyone's got a view on what energy we should have. So what do you see the most, and how are you looking to try and combat that?
So I think we just need to remove that narrative of the residential side. It's sort of plaguing us, and you have the home insulation scheme or any scheme, it sort of brings the wrong parties to the table. We have people that are looking to mass sell solar into the residential market that aren't interested in the financial upside for the people that they're integrating it for. Understand all of that, but certainly in the commercial and industrial space, you don't have to look very far basically to sort of understand all of that upside and understand the upside from, upside and investment. If you look at the investment and in particular who is investing in it, it's pretty clear to see that it's here to stay.
So your proposition then, and to sort of combat some of these misconceptions or the way it's always been done, your proposition or position is you have these power purchasing agreements. So Rethink Renewables buys the asset, installs it, has a lease connected with it. So you have a relationship with the landlord and you have a relationship with the tenant. You negotiate and manage the tenant relationship. You just need landlords to pretty much go, to your point earlier, Scott, here's all the benefits of having this capability, how it's going to be a yield play and potentially a capital growth play. But you don't have to worry about it all.
Yeah, that's right.
That's what you're doing.
And there's a lot of work in it. Like, you need the legal paperwork that the tenant will be happy to sign. You're effectively billing them, your AGL for them, so you've got to set it up properly. And the benefit is, like, it's no money down, just to repeat that for these guys. So,
for landlords, doesn't cost you anything.
Zero.
And for tenants,
zero.
Doesn't cost them anything to do with the capital costs.
Exactly.
They get the benefits of what should be cheaper power.
Exactly. So there's really no reason why they shouldn't do it, other than just the education side. And like, I was having a meeting with some property managers in Melbourne, and they were trying to sell their stock to us, and it was all sub 6%. And we set our rule, like, we want to hit 6% nets whenever we can. And they had all these properties at 5.6, 5.7, and we looked at it. You go, you've put your solar on it. We're basically at 6%. So we can hit our metrics and buy it at that price you wanted because there's a new income on the property. So it's a boosting yield technique, no money down. There's a 10-year lease on the roof. It doesn't cause any problems with the roof when it's professionally installed, and there's no insurance issues. We've checked all that. It's kind of like, it's, again, win-win-win. And when I sort of got onto this, it's just remarkable how it hasn't been seen from the landlord's perspective. So that's what we are introducing, and it will go big because it's obvious it will. It's a no-brainer. That's the difference. It's just having someone willing to take the risk on your roof, because effectively the business is taking the biggest risk. Like, I'm going to put $100,000 of my own money on your roof. I don't own your property. Not many people would want to do that, but because Rethink's a unique position, we're talking to thousands of commercial investors across the country. We've got their trust. We know every property manager in the country basically as well. So we've got the networks. We just, need to work on the right jobs.
I guess that's the benefit of the vertical integration, right? Because you've got a captive market of investors who are investing in the right type of assets to benefit from this, right? I would imagine you don't have too many of your clients own, massive shopping centres like Westfields and stuff, right? It's the sort of stuff where the application of this works really well. But I think, Paul, you made the point. There is some limitations to solar because it doesn't. There's no sun at night. But to make sense, also, like, most industrial units don't operate at night time, so I get that as well. So, how does that balance? So you would still need connectivity to a traditional power grid for those times when stuff doesn't work.
Yeah, correct. You still need to maintain your connection to the grid to provide your energy outside the confines of what the solar produces. But if you look at you add a solar system to a roof, you generate, the tenant consumes that energy. You add that bill with the head bill. Again, that's where you're finding that anywhere between 10 to 20, sometimes 30. It just depends. That's pretty malleable. But there's a misconception, probably one of the biggest misconceptions, and something that we deal with quite a bit, is the residential solar space is sort of, especially in the early days, it's generated this idea or notion that we're actually selling energy back to the grid. We're not. What we're doing is we're entering into
that's a traditional model. Is in you have these assets and you push it back up into the grid. What you don't use as a residential property owner.
That's a utility model.
Yeah,
So basically, if you drive past a big solar farm, the model for a solar farm is to feed that into a grid. And they've done their metrics. They have a negotiated agreement, to generate X amount of capacity into the grid. But for a commercial and even a residential application, there is no benefit to feeding into the grid. In fact, Ausgrid, which is a really large DNSP, so a service provider, they're actually introducing a penalty for feeding solar back into the grid at this point. So basically what's happening in the market is there's too much solar at different times in the day, and they don't want it. So they're saying, well, if you feed it back at this point in time, we don't actually want it. Yeah. And the same provider is to put.
So there's a lot of solar energy going wanting at the moment.
Yeah, but that's the battery fix, right? So the same provider.
There we go.
The same provider is investing millions of dollars in putting batteries. They're called community batteries, and effectively they're just soaking up all of this excess generation, and they're dispatching it back at night when it's needed. So when you look at it from that sense, it becomes, and I won't get too technical here, it becomes a virtual power plant. You become a decentral power plant when you start to have all of these combined rooftops and all of these combined battery assets.
And are people going to be happy with the disaggregated power capability? I'm trying to think of the negatives of that. I imagine big energy would hate it. But other than that,
very much so, very much so. So I think what are the barriers to that? And that is big energy, big distributed network service providers. Your Ausgrids, your Transgrids, they have to pay for all of this infrastructure to go in. So you've got a coal-fired power station that's got to transmit from a rural location back across into Sydney, as an example. So they've got to pay for all this infrastructure. They've got to pay to maintain it. It has to sit there. When you look at a decentral model, if there was enough space. So picture this: if there was enough space, if you said every rooftop in Sydney had enough space to put a solar system on, and we had a virtual power plant agreement model where, hey, I'm not using it, but you can have my my production. That's a VPP. That's a virtual private power station.
So the government wants to do it because it's good for the climate and probably helps buy votes, right? But let's not get too cynical about that. But I would say that, particularly the current government is so connected with big business. I would imagine that big business is happy if they get the benefits of the government's investment in solar, but not at the expense of losing market share to smaller power manufacturers on the top of commercial properties. So government incentives and regulation, it's going to be inherently built towards benefiting large companies. Will the government disincentivise, do you think, smaller micro manufacturers of power who use it and not share it pretty much?
No, I don't think that. I don't think that's going to happen.
You don't think so?
No. Look, ultimately, we're a step behind in reaching our 2030 target of 82% renewables.
Yeah.
I think the dispatch is about half the pace it should be at the moment. There is huge pressure from all areas, all political areas to reach this target, because failure to do so, you're in breach of your climate agreement. You're in breach of that Paris agreement, and you just political suicide. You wouldn't go there.
So with this solution that you guys are creating, which sounds really innovative, you make the power and the tenant uses it. The power that the tenant doesn't use, on the same basis, will be a localized storage capability, so you can use it in the future.
Yeah.
But you don't share it; you keep it.
Commercial batteries are, again, I won't get too technical because
get too technical.
It's a very technical field, but effectively commercial batteries, the typical battery model, everyone applies the residential logic again. So the residential logic is my solar system generates power. It supplies my house during the day, and it also charges my battery. And then I use my battery at night. So that's a conventional model. Commercial batteries are entirely different. So they actually monetize themselves by operating and fixing the problems that even solar creates, right? So that big peak and trough curve that solar creates, it fixes those network issues. So ultimately batteries aren't a single source of revenue. There's multiple sources of revenue, and that's in the commercial space. Certainly residential, they still do that arbitrage function, but in the commercial space, there's multiple avenues of monetization. And if you put this into a commercial investor, you look at it through the lens of a commercial investor, that's really difficult. Yeah. That's really, really hard. I'm not interested in operating on the electricity network. Let's leave that to professionals. So for us, we know that network. We understand it. We know, what battery asset to use. We know where to put it, geographically because of load. We understand all of this because that's our area of expertise. So for us, it's, you're not currently using the area right next to your switchboard, that's typically got pallets stacked up next to it, or some description of area that's otherwise not lettable. Let us put a battery asset on it. Let us operate that. And we'll also, talk to you about reducing some of your KVA demand, for big commercial businesses. 60%, 40 to 60% of their bill isn't the actual power bill. It's the demand bill, and that's the network providers basically saying, we spent billions to provide you this infrastructure for 2 seconds of a day. We want our money back, so that's all the charges in the bill.
Yeah. I hate looking at power bills. It annoys me, particularly as a commercial tenant. But you made a good point, and what I'm trying to do is view this through the eyes as a commercial property investor, which I can do, and I've got commercial property with big roofs on it and stuff. So it's good you framed it that way. Welcome back. Phil Tarrant, co-host of Inside Commercial Property. I'm chatting with Scott O'Neill, CEO of Rethink Group, and Paul Harmsworth, Director at Rethink Renewables. And I'm trying to get my head around putting solar power capabilities on my investment property. So that's absolutely a big discussion for today. Now, Scott, to the point around convincing me to do this, right? Mm-hmm. Which that's what it is, right? And you've got, like me, a client of Rethink, you've got thousands of other people, right? Is the most important thing getting the tenant to subscribe to this first before the landlord? I'm just trying to think of the sequence of making this reality. So let's just assume that you guys can put the assets on the roof and it can be done the right way. Yep. The sun is largely predictable. It's going to move in the same way through the sky at any given day at the same way it did probably the year before, right? Like that you could. So let's just assume you can sort all that out and yep. and the economics of it work, right? Is it the landlord or the tenant that you need to convince first to make this a viable proposition?
Well, look, you start with the landlord because you can't just start talking to random tenants. They'll think, who are you, basically? So the introduction's always made through the landlord. We've actually started incorporating this through our due diligence process because the problem is you've got to get the bills or the intermittent data, which Paul will clarify exactly. But it's more detailed than just getting the power bills. And you've got to work out the viability before you even talk to the tenant because you don't want to waste their time if they're not, sometimes it might be a big cold storage facility, but they're on commercial rates. So the margins are too thin. Don't bother talking to that tenant. They're not going to be a client. But you got to sort of break up the deals into ones you want. There's basically categories, and you go for the top category of where the margins work. And then, the tenant is the hardest part of the process because they don't understand it. They just see this random solar guy or battery renewables guy trying to say, look, you are going to be paying or getting your power from us now. So that's kind of a bit of a shock. So the education process from our experience with the tenant is the difficult part. Landlords are all for this. It's a no-brainer, like I keep saying. It's a free income, essentially. So we've had no pushback almost, or maybe 1% 5% pushback from landlords, so 95% are keen. And the tenants, that's where it gets a little bit more hazy, especially if you're dealing with a national company, because they might have to go through head office in Melbourne and they've got no idea who this guy in Queensland or Perth is trying to sell them solar. So it's a lot more fiddly at that end, and that's where the time goes. And then obviously you've got to sign a legal agreement with them. They've got to prioritise your power over the mains. It's more complicated than you think.
So the key upside for the landlord is increase in income generated.
Yeah. So like an example, we were looking at this is a large deal, 20 odd million shopping centre, and you can actually boost the yield by up to 0.5%. So you can turn a 6.5 into a 7% net yield. You know, work out the math on that. It's pretty big upside. So and the reason the upside's larger on that is because there's lots of smaller tenants and they pay a higher per square metre rate. So you know, even a discounted rate on a higher rate, like you're basically making more money, and the payback period is quicker on the asset that we're putting on. So you know, then you could pay them a higher lease value. So you get the lease rent, and like Paul mentioned, there might be that area out the back where you could put a storage facility for the battery, and you might pay a few $1,000s per square metre for that as well. So that's more income for the landlord. That plus the solar, plus maybe some EV charging stations for the bigger centres. You might be getting $5,000 a pop per annum for those. It's all variable. These are just large numbers. None of it should be quoted, but it's just kind of high level what you can expect.
So what I'm trying to work out is essentially for most landlords is the juice worth the squeeze, right?
Yep.
And they're using an example of a suburban shopping centre. Say there's 20 tenancies in it, and you've got 20 different lease agreements connected with it. So on that basis, then that would be another 20 individual, what I'll get the name of right, PPAs for each of those different tenancies, which is a lot of work. But that's how it would work, correct?
Yeah, and that's why you need a fully functioning business unit to deal with it. I wouldn't bother doing it with myself. Like I've got plenty of properties, and you know, I've had because a lot of the individual property managers get kickbacks from solar companies.
I was going to ask you how it worked. Whether what's the role of the property manager as part of this process? And are they going to be happy if they're getting thrown out of a deal where they've traditionally maybe got a little bit of an earn on the way through?
Oh, some aren't. But if they're attached to the sales division, they're boosting the yield for the landlord. Like you got to help your landlords at the end of the day. If you boost their income, you're a good property manager. So. Look, that's what I was up against. And again, I was getting hit with all these solar quotes over the years on my own properties. And I kept thinking, why are you coming to me with this? And I ask them, and they get like little kickbacks and stuff like that. So why not? But I didn't want to then spend all that money on solar myself, because I may as well just buy another property, get a freehold property somewhere else. Long term, that's probably a better play. It's lower risk, of course.
Yeah.
But if you have a business attached and then you're getting that yield benefit, that's where it's a game changer. So that's why I'm doing it on all my properties where it's viable through the same business. It's the exact same process a client would face. And now I get that, maybe it's a 0.4% yield uptick, on many millions of dollars of property that equates to a pretty big uplift as well. And then it's just diversified income, makes the properties more green. The tenants can get their tick of approval too, depending on their business. They can advertise they're using green energy. It flows down the line. There isn't really any losers except for the mains power grid.
Yeah, but big business, right?
Big business does not like this. Yeah.
And I was going to ask a question. You sort of answered it then. It would make your building more attractive and it would create stickier tenants, I would imagine, if you have this capability, because yes, they can have the ESG feel-good moment of using green energy to manufacture or do whatever they do, but it means it's going to be cheaper power. And we just saw in the budget that the government's shelling out $300 to every household, right? But small businesses also getting a little drink as well around their energy bills.
Exactly, and think about the long-term effect. It's going to soften the blows of those increases as well, because power's going up. How much did it go up last year?
Yeah, it was quite substantial. I couldn't give you
Well, I think it actually went up 17%, but the government said because of all the great work and stuff, that was only 2 or 3%. I think that's what they said. I don't know.
But it feels like numbers. Power has been going up a lot quicker than that the last decade.
My power bill, I look at it this year versus last year, I just go, oh my God, I've got no idea how this...
Extra zero.
Yeah, it's crazy. Yeah, it's mad. But All right, so it sounds good. This idea, and you've said that there's no upfront capital required. So I would imagine traditionally, and you as a property investor with a sizable portfolio and helping heaps of other property investors, most people would go, the utility of my capital. Am I better off personally paying to put some solar up on the roof to get an uplift on yield, which I get the benefit over time, whereas why wouldn't I use that capital to sink it into another asset to build it out? So what your proposition is for landlords, for property investors, is it's not going to cost you anything.
Yeah. So a good analogy I like
I say
using,
it sounds too good to be true.
Yeah.
Yeah.
Well, a good analogy, I'll use a property analogy.
Yeah.
It's like building a granny flat. Yes, you could build a granny flat, drop, back 10 years ago it was 100K into it, and you'll get your $250 a week rent for it. Am I better off leveraging that 100 grand into another property in Perth, Brisbane, Adelaide, wherever, and then benefiting that way? And that's why I never built granny flats, because I'm like, why would I do that? I don't want, it's just an inefficient use of your capital over time.
I have zero granny flats on any of my properties.
You're smart.
Same
and
reason.
they're not a bad thing, but it devalues the best benefit of property, which is leveraging money. And you want to acquire more land over time. That's basically what every buyer's agent will ever tell you. And I guess the same theory applies. Like, you can put this money in yourself and benefit from just reducing outgoings on a shopping centre, all that. And it's a viable option. It's case by case. Or there's spreadsheets Paul works on that literally go over 6 different Excel pages, and they all filter through. Like you said, there's hundreds of inputs.
I bet you love that spreadsheet.
Yes. Yeah. You get deep into it.
Yeah, I bet you do.
Question like, oh, what's that? No, but
nerds of a feather.
Yeah, absolutely.
But you got to get those variables correct, don't you? Otherwise, it's toilet paper. That thing, it's useless. That's the key to getting it right.
It's when it's typical when someone says, "What does it do?" It's like, well, I need to input it into my. It's not 6 anymore, mate. I think it's closer to 10.
So you have a proprietary little special machine now that you put the inputs in and it comes out the back end.
Yeah, absolutely. We have to, because we're investing the capital into this asset, we have to basically say, well, the market will be doing this in a couple of years' time, or what's the impact to the market if there's more renewable energy generation? Is it going to get cheaper? And I suppose probably another key point in and amongst all of this is you have the typical gross lease. I can implement a solar system on a roof. I can have all of the yield and all of the upside, but if you wanted to generate equity in your property, my question would be how? You can't lease that system to yourself. It has to be through a third-party organisation like ourselves, and there's a lot of hoops that we have to jump through. We have to be an exempt retailer, and by classification, we have to have the legals to support our exempt retailer, sort of classification. So, to be direct, you just can't. You can't create that equity upside for yourself. And more to the aforementioned point, unless you are in the energy markets, good luck is all I can say. Because you have to know it. You have to have your finger on the pulse.
I get that, and it sounds, there's a lot of things in property and property investment which has very little and low barriers to entry. Right, most people can invest in property if they can get a deposit together and a bank will lend them money. Right, and thankfully, there's people out there who have made property investment a lot more idiot-proof for people like me, right? Like, it's hard to go wrong if you educate yourself, listen to the right people, and use the right people. But what you guys are talking about, there is a degree of sophistication and smarts, which I think have a very high barrier to entry. So my hat's off to you guys for being ambitious and courageous and trying to democratise tenants and also landlords' ability to access smart power, which has benefits for the climate and also for the future. And I want to talk about financing it, but I imagine we're going through a lot of detail on this. Did you have this we've spoken about the sort of tenant benefits and the lease agreements and stuff, and I know a lot of people who are probably wired a certain way probably going to want more info on that. What's the best way to get that from you guys? Is it like on the website or come and talk to you guys and all that sort of stuff?
Drop us an email, info at Rethink Renewables, and we'll come back to you. The first thing, and obviously the most important thing that we ask for is just a recent tenant bill.
Yeah.
We can, as Scott sort of mentioned, we can pretty quickly identify if it's gonna fit in the wheelhouse, right? So we can look at a bill. I can look at a bill, and within probably about 10 to 15 seconds, I can determine if there's a viable prospect in it. So the pre-qualification stage is really fast.
Okay.
It's a tick box exercise to say it works or it doesn't.
So you just look at what they're buying power for and whether or not it's worthwhile going through it, and a lot of it be based on who the tenant is and all that sort of stuff, right?
Yeah, correct. Yeah. So remember how I mentioned that levelized cost of electricity?
Yeah. Levelized. Yeah. What's the acronym?
LCOE.
LCOE. I can talk about LCOEs now. I'm an expert on this stuff. So how much of your time? So you guys have a economic model for this to make. I'm sure there's an altruistic bent with this, and that is to provide green energy. But you guys obviously want to make a buck out of this as well, right? So there's an economic model for you guys to focus on, and it sounds like you've crafted that and you've actually got it in action, which is good. How much of your sort of what keeps me up at night is the future direction for how the governments, particularly in Australia, will embrace investment in renewables, and whether or not there's going to be continued incentives and favourable regulation around it. How much of that is an issue versus buying the stuff and buying the stuff well and ensuring that it's got longevity of capabilities, because you buy a solar panel today and 2 years' time it's out of date and superseded and stuff. So give me a sense for that.
Yeah, look, risk is fairly minimal on the government incentive side. If you were saying, would that keep me up at night? Absolutely not. What would? Look, changes to market regulation, but it's just so unlikely. It's just not going to happen. You can never say never, obviously, but based on the fact that this is a tried, tested. You talk about spreadsheets. I can roll a scenario basis 7 different ways, and the likelihood of impending doom coming out of a left of center and wiping us out is pretty low. And it's almost like, what's the likelihood of the sun not coming up tomorrow? Do I model that? Probably not.
The solar flares the other day, we had all that sort of stuff, which make people a bit jittery.
Yeah. But I think to answer your question directly, there's definitely things that we need to consider. Lease terms one, right? For us, we sell the energy that we generate to the tenant. So if the tenant has a short lease, they move out, someone else moves in, we are effectively catered to the preceding tenant, the tenant that's just moved out, and we need to make sure that we have enough sort of malleability in the model to cater for any tenant moving back in. Now, we get pretty smart with this.
You want it to be attractive for the next person that comes in that goes, oh, we'll have that, thanks.
Yeah, 100%.
Because last thing you want is redundant assets on the roof that ain't getting no use.
Yeah. And it sort of plays into that misconception. We don't want a system way too big for the client's demand, because it's going out onto the grid. We're not getting anything back for it, not interested. So effectively, we can look at a property, and Scott's excellent at this. It's look at a property and say, what's the likelihood that property that's currently a logistics or it's a warehouse and the energy consumption is X? What's the likelihood that that's going to change into a manufacturing facility? That's great for us. There's no risk in that model, because if the load goes up, the system is there to cater for it. It's the opposite. It's the inverse of that. If it goes down, so if we're putting it on a manufacturing facility, they all move out, and then we get a freight and logistics business in. That's a bit of a concern, because we've catered for the manufacturing business and the load. So that's probably the risk profile. Or the tenant changes. They turn around and for some reason they were a 9 to 5 tenant. They now become a 5 p.m. to 5 a.m. tenant.
Black kitchen, and they're just cooking up Uber Eats all night.
Yeah, that's right. Yeah.
And so how are you guys paying for all these solar assets that you're putting on people's roofs? It's, again, you've probably got a model for this, but it's got to be up there for a period of time before it makes commercial sense. So how big can this get for you, Scott?
Oh, well, right now banks don't like it. So, we've obviously got thousands of listeners here. So if anyone knows any really good green loan solutions for solar on third-party roofs, we're all ears. But right now it's cash. So it is it's a horribly cash intensive business, and that's why we've got to break up all these. All these people that call up wanting access to it into tranches, and go for tranche 1 and then go into the second tranche. Basically, there's not that many people that we can help because. Until finance opens up, and then obviously that'll kill the return a bit because you've got to introduce interest into the model. Cash at Works is probably a 4-year payoff, so it's maybe 5 years depending on it. But yeah, if you introduce finance into it, it pushes the payback period as well. So there's a lot of business risk there, I'd say. So this is not for everyone. This is probably one of my riskier businesses, I'd say. But in a way, it's not as long as we're comfortable putting cash on someone's roof.
Yeah.
So, and I am. And it's just, it's part of the commercial market I know so well. So it's a way of kind of increasing yields, and it sort of completes the service for our clients too. Like, especially our larger clients buying big shopping centres, it always works on those deals. So anyone with a shopping centre, you can boost your yield by up to 0.5%. And that's a really good news story.
Well, it becomes meaningful if you've got pretty high rent. So, Paul, thanks for sharing that, mate. I really enjoyed having a chat with you. I'm super curious about it. It's cool, and thanks for dumbing it down for someone like me. So, if questions stuff, just info@rethinkrenewables.com.
Yeah, we'll come back to you. We'll come back to you pretty quickly, but just attach that bill, attach that tenant bill, and we'll get you an answer really, really quickly.
All right, that sounds really good. Now, Scott, we started doing this last podcast, has been super popular, so I want to close out this podcast with answering your burning questions. So this won't be me, this will be you, and these are all coming through your social media feed. So I've got 3 questions here. So let's quickly get through them. A bit sort of hypothetical, so bear with us. Sorry for now hijacking this. If you had 0 property and someone gave you $20 million to invest in commercial property, what would be the most effective way to invest it?
20 mil cash.
Cash money, no debt.
Wow. Oh, I'd leverage it at least 50%. So you'd buy 40 mil in property, just because I'm assuming you're a novice, because you'd probably go 60, 65% LVR if you could. But just for simple terms, leverage it by 40 mil in property. I'd definitely buy one shopping centre for 20 mil, because that's where the good ones start. You can get good deals at 10 mil, but like you're dealing with bigger critical mass type assets at that price point. So 120 mil shopping centre, and then 2 industrials around 10. Like, you go one in Brisbane, one in Perth, shopping centre, wherever, as long as that 5K radius around it's rock solid, you'll never work again, nor will your kids. And
if you leverage it 50%, would you be able to cover the debt you have on it through the income that you're generating?
Yeah, you should have your 1.75% interest rate cover, so full doc loan. You could be unemployed just getting a loan on that cash because the properties back it up. Especially strong assets like that. This is basically the fund manager model. There's no personal guarantees on those loans. They're just loans on the properties, hence why I said 50%.
So if you had $20 million in cash, you're set if you deploy
and
it
your
well.
kids, if you educate them.
And you educate them well. And you put solar panels on the roof, right?
Yeah,
So,
Paul up.
All right. That's cool. All right. Well, if anyone's got a lazy $20 million sitting around, just give Scott a call. But there is people like that, right?
Surprisingly, yeah.
There is people like that. Next question. Selling resi investment property to upgrade to commercial. Do I need to keep resi as a base, or is it okay to go all in on commercial? And we could probably chat a lot more about this. We have a podcast on the Smart Property Investment Show where we talk about this, but give me just a quick answer to that, mate.
Super common question. I generally would say, depending on the asset class, like if it's a 1-bedroom strata intensive thing on the Gold Coast, sell it. Your money's better off out of that thing. But if you've got a good classic 3-4 bedroom home in the suburbs, you're better off from a tax point of view, I think, to just refinance it, pull the money out of it, and then then you still got that asset cooking equity in time, and then you can use that equity faster because it's faster to refinance than sell generally, and then you can get into the commercial market that way. And
that's probably a question for your accountant as well, because so if you refinance the investment property that you currently have, top it up to 80%, use that cash and deploy it elsewhere, that means 100% of that debt is tax deductible.
Exactly.
Yeah. And that is a great strategy that a lot of people sort of cascade through to get to a point where they can maybe do that across 4 or 5 properties, simultaneously get enough money to buy a commercial property.
Yeah,
as
and
most people then do.
5 years later, you got more equity in the things. So redo it,
Redo
pull it, and go into another commercial.
But I guess it all comes down to buying the right residential properties.
Exactly.
Yeah, that's what it is. Okay, last question. What are your thoughts on syndications? Did you write these questions? These sounds awfully suspicious.
No.
What are your thoughts on syndications? Should you get in with friends to purchase a better asset, or is this risky?
Look, if you're doing it with friends, it's risky,
without
a doubt, because people are unpredictable beasts, to say nonetheless. Like, they're literally more likely to fail than not. So if you're going through some like fund manager company, like, at least you're investing into the fund, which, has been around for a while and done,
And it's got oversight because there's a lot of regulation.
Yeah, and they've got proper agreements to say you can't sell within 5 years. Like, your money's locked into it. So, and again, that may be a disadvantage or maybe not, because it means you keep your money into an asset for long periods of time. But I think there's always circumstances where it makes sense, but like, if 2 brothers are investing, they can, put their $1 million each into it, leverage up, get a much better quality asset, for sure. But yeah, in general, try by yourself. And if you're investing large sums of money, you're always better off buying your own asset rather than putting, more than 7 figures plus into some fund manager's job, because there's more fees in that.
Yeah.
But if you might go, I'll put 250 into that one, then you've got 4 different funds, diversified income. That's also a good strategy.
Control is important, and you see syndications often fall apart because people go into them with the best intent, and then people's lives change, and it turns into a hassle. So controlling direct assets.
Someone gets divorced. Someone's needs money because they've lost their job. It's all on the table that happens.
Okay, good. All right. Well, thanks, gang. It's good to catch up. Good to see you again. And we've been spending a lot of time together as well lately. Thanks for having me last night. You had an event on for high net worth individuals who are investing in commercial property, which wasn't me. I was just a moderator for a panel. I'm a low net worth individual. But mate, I really enjoyed the chat. Some interesting folk there, and it just resonated with me. And I talk a lot about it, that you got to surround yourself with the right professionals to help you be a better investor, commercial or resi. But peer-to-peer learning with people doing the same thing is also a huge contributor as well. Chatting with people who are doing the same stuff, sharing war stories is a great way to learn.
Yeah, no, we're really enjoying sort of getting to know our clients a bit more. It's sort of a new initiative, because we've been just so busy over the years, growing and it gets monotonous just doing deals. So, you get to learn more about the person on the other side of the transaction. So, we'll be doing many more events. If people are interested, just reach out. It's a new initiative, so, I don't know where it'll end up. But, every 6 months or so, we'll get people together. And, information nights, last night you said we had a Ray White economist there. Extremely knowledgeable, talking about all the future of Australia. So
it's pretty cool
great
stuff.
Info.
Yeah. Okay. Well, you reach out to the team at info@rethinkinvesting.com.
Info@rethinkinvesting.com.
All right, I'll find you on the Facebook and we'll answer your questions. Thanks for tuning in, everyone. This is Inside Commercial Property, episode number 49. We'll be back with 50, half a century.
Wow.
We should do something special for that.
Yeah, half a century.
Yeah.
Got it.
Yeah, we'll work it out. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.